Investors are indeed waiting for Nvidia earnings after the closing bell tomorrow. Stocks move higher on that. The focus is on tech when it comes to AI, but there's another sort of corollary, surprising sector that has become an AI bet. We're talking about utilities. As we pointed out earlier, it's the best performing sector this year. Joining us now is Pavel Molchanov, Raymond James Managing Director, focusing on renewable energy and clean technology. Pavel, thank you so much for being here. Appreciate it.
Thanks for having me.
So this line that people are increasingly drawing between the power that's going to be needed for things like data centers and the growth of AI and utilities, I guess, first of all, just big picture, is this the correct conclusion that people should be drawing here? I mean, after all, utilities are a regulated industry. How much upside are they going to see?
Utilities have regulated prices. That is absolutely true. On the other hand, the amount of electricity, meaning the kilowatt hours that are used by the economy, that is ultimately up to the economy. So if data centers, for the first time in 20 years, create growth in overall U.S. power demand, that is a very good thing for utility companies across the board. So volumes of their sales go up, even though the price is fixed by state utility commissions.
So, Pavel, it's interesting because traditionally, if you thought of utilities and you moved into them because you were hunkering into a defensive crouch, it was the same reason you went to Staples or healthcare. But now it's a lot of people perhaps moving in because they want exposure to that boom of interest in AI. So should we think of Pavel as it's both defense and offense?
Well, it's predominantly defense. Let's be honest. When we talk about power demand growing in the United States, it's a big deal because we have not seen U.S. electricity demand growing meaningfully for 20 years. That being said, the kind of growth we're looking at is, between 2 and 3% a year, right? So, we're not talking about double digits. 2 to 3%, that is a big change from virtually no growth since 2007, but it's still, not exactly tech sector kind of growth.
And there has been talk that the power companies that will do the best are those that perhaps are in areas, physical areas, where you have a lot of data centers. Is that how you see it playing out?
There's a lot of regional variability here, yes. So Virginia, Data Center Alley around Washington, D.C., Ohio, another big place, to some extent Texas, not as much along the West Coast. Why? Because in California, power prices are very high, and therefore the economics of data centers are just not as attractive. So, it's predominantly going to be in places where electricity is cheaper. And, just to frame that, California, people pay, at the residential level, 30 cents for electricity. National average is half of that. It works a little bit differently in the commercial or enterprise market, but you get a sense of how different these price structures can be depending on the state.
Pavel, let's say you're a viewer, you're listening right now, you're very curious, you too would like to play the broader, grid modernization trend. One way to do it, Pavel, you say, is GE Vernova. How come? Why that name?
GE Vernova does everything for the grid: natural gas, nuclear, hydro, wind, and also all the infrastructure. So the transmission networks, the power storage, the software for utilities. This company does it all. And half of its revenue is recurring. So it's services in addition to the equipment itself.